Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors. Let's get started. Last week, Kane presented SIP 420, a proposal to create a mechanism for SNX stakers to provide staked SNX to a protocol-owned staking pool, where the protocol will own the debt and use it to generate yield via Athena. The key aspects of this proposal are that stakers would have the opportunity to delegate their SNX to a single protocol-directed staking pool. The C ratio on this pool would be 200%, allowing it to be more capital efficient. There would be a penalty C ratio assigned to individual stakers, currently proposed at 1,000%. The pool would then mint SUSD, followed by SUSD-E to generate additional yield and distribute that back to delegators in the pool. And 250,000 SNX from the Treasury will be allocated to offer bonuses to CCs who implement this proposal, at the discretion of the Spartan Council. Currently, SNX is one of the only remaining crypto assets that's still accepted as collateral for minting stablecoins. This SIP aims to leverage that reputation as a stablecoin provider to generate revenue for the protocol and stakers. Kane acknowledged that there are many parameterization and optimization details to still be worked out, but he thinks this is directionally beneficial to the protocol. Rather than incentivizing stakers to issue and allocate debt where it's needed, the incentive would be to delegate the collateral so that the centralized pool managers can allocate it as they see fit. This reduces the risk of bad debt, as any debt issued in the pool will be allocated at the pool manager's discretion. There are, however, still market forces at play to get users to delegate collateral to the pool. Kane also stressed that the time to do this is now, on the cusp of a bull market, rather than waiting and potentially missing out on yield. And in order for this to work, the recent PEG issues need to be addressed first. According to Kane, this is as simple as adding incentives to ARB the curve pool. There were several questions in the chat after the presentation, so let's review what was asked and how Kane responded. The first question was, how will the yield be generated? Kane said primarily with Athena to start, with a C ratio reduction from 400% to 200% immediately. With this change, twice as much debt can be minted on the same collateral to generate yield. He added that Athena needs staked ETH to scale their stablecoin, and there wasn't as much demand to provide staked ETH to the protocol for collateral, so they've changed their approach and have begun accepting stablecoins. Next, someone asked if Athena would be selling SUSD for staked ETH, and the answer is yes, and the curve pool will need to be incentivized to accommodate this selling. Kane estimated $10 to $20 million in TVL would be needed to allow for sales of $1 million a day. The next question was whether this would start on mainnet or if it would be released on Optimism as well. And Kane said that this was a technical detail outside the scope of this presentation. The next step would be to see an implementation plan from the CCs within 48 hours of an approval vote to ensure accountability and transparency. A member of the audience then asked how long a hypothetical debt reduction program would last if that's the direction the council decides to take with the proceeds of this pool. Kane answered that this is one of the optimization levers that the pool managers will have to decide on to sufficiently incentivize the delegators to keep their collateral delegated. The last question was whether or not there had already been discussion with Athena regarding this proposal, and there have been. Athena is happy to have more collateral as long as there's liquidity to convert it to staked ETH. Overall, Kane is bullish and thinks the council needs to ruthlessly prioritize doing whatever has the potential to reinvigorate the project, starting with protocol-owned snacks. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.